Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Thursday, June 16th. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. And yes, lots of volatility, obviously. We're on the heels of the Fed raising interest rates. The consensus, was that it was going to be 0.75. Although they had broadcast zero point 0.5, they did come in at 0.75. The market seemed to like it yesterday. We got a bit of a rally as people digested the information. But here we are this morning. We're giving back all those gains. Equities looking very weak. Now, we've also had some other things happen overnight. The Swiss raised interest rates 50 basis points. They haven't raised interest rates and I don't even know when.
Is it
Now,
raising when you're still negative though? I
yeah, I
feel
know
like they
it's
just less negative, right?
they're
Can you
less negative. They went from
can
negative.
you be positive negative?
Does two negatives make a positive?
Yeah, I
Uh,
know. I feel like
there's some. It gets very confusing. They went from
right.
negative 0.75 to negative 0.25, so they're heading towards zero. Now, that has caused some significant movement in the Swiss franc. We got the pound moving pretty dramatically because they also raised interest rates, but they stayed uh, in line. They only raised 25 basis points. They didn't get as aggressive as the United States did, and we've got Bank of Japan is coming in on the radar right now as well. So FX markets are all over the place. Lots of volatility there, and equities. I mean, obviously, everyone's trying to figure out what this is going to mean for corporate earnings and how that's going to manifest itself in stocks and equity indices. So we've got a lot to kind of go through this morning. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. If you take a look at the Swiss franc, clearly that's a very significant move. But we're seeing similar types of moves. I mean, the yen has got. I mean, it's getting kind of crushed as well. Finally, it did hit that 135 level, which we knew was a lightning rod. It actually pushed higher, but and then boom, here we are back down at one in the 132, 133 range. I mean, FX all over the place. Lots of trading opportunity. A nice thing about that with Nadex, with the binary options, with knockouts, and with call spreads, you can certainly get into these highly volatile markets in a defined risk reward environment. If you're not familiar with knockouts, I will be doing an educational session in a few hours to introduce people to knockouts. So if you are unfamiliar with that, go to the Nadex website, go to learning webinars, and you can register for that. All right, Brian, I'm going to flip it over to you and let's get into some of the other headline news, and then we can get into these charts because, again, there's a lot to talk about in the charts with FX, a lot to talk about in the charts with equities.
Yeah, I mean, we mentioned yesterday was going to be an absolutely monstrous day with everything going on, and it was. I mean, really, if you look at just yesterday, I mean, it started off with really really horrible U.S. data, and then they lumped it in there. They actually did, and again, the forecast was that zero point 0.5. They actually did go to the 0.75. I was shocked. I didn't know that they would do it. And looking at some of the data, it's kind of some of the statements and things, the way they're trying to frame it, I think is very interesting. I think it was the right thing to go to the higher amount. I think that's what's needed, but some of the language they used was a little bit different with it. So I'm glad that they did go there because that's where it deserves to be. Um, I don't know. Does it make the most sense after the retail sales numbers? It's really hard to take one data reading, but again, taking the CPI being as high as it was and accelerating, that's absolutely that's pretty much considered the number one mandate is really controlling inflation, and it is so out of hand at this point. They had to look at that first. It's kind of like you know what? I mean, it's almost like. For lack of a better word, I mean, I can say this. I have two parents that have had cancer. It's like chemotherapy, right? If that that you got to get that couch out. They burn the entire house down to make sure that that couch is not going to be the cause of the problem, and that's what it is right now. Inflation is kind of what it's doing. It's eroding everything in the United States right now, and really in the entire world. And even though all these data, all these figures are bad, they were forced. They didn't. Jamie Dimon was right. They did not have any other option. And people were scratching their heads looking at this, being like, we're nobody's buying anything more. How the heck do you go, a 0.75? It's the largest one since 1994. And because their hand was forced. There's no other way to put it.
Yeah.
Other big data last night, which again really affected everything. You see that the GDP in the New Zealand was actually down. It was a major miss. That was some big movement for New Zealand. And then Australia came in afterwards, and their unemployment rate didn't drop. I mean, again, it didn't go higher. It kind of stayed where it was. They thought it was going to go lower, but they hit a massive amount, over double the amount of jobs created there. So again, Australia has been much more aggressive. We've seen that. And then obviously this morning, the surprise was the Swiss, and it's a surprise, but it's not. I said yesterday I didn't expect them to change anything, but I did expect language. And I said, listen, it doesn't matter if they raise or not raise. If they say that next time they're looking to raise, it's just like if they raised it this time. And what were they going to do? Say they were going to lower it more? No, we already know that everybody's in an interest rate rising environment. We know that the ECB is talking about raising in July. So even if you didn't expect this, if they would have said it in the policy assessment that we're going to be raising it in July, or our next meeting we're going to raise it, it would have served the same exact purpose. Now, did I have any inkling it was going to be a 0.5 drop for the Swiss? No, that seems like a pretty big drop. But the Swiss has been making a lot of noise lately. Hence why the dollar Swiss, a pair that's got approximately mid 60s, is kind of what their ATR is for a day. 256 to the downside. So you may look at this and say, well, how the heck could I have traded that? I didn't know they were going to trade it. Well, you did know that everybody else in the entire world is raising interest rates right now. The Swiss was projected not to, but they got to be close. Their country is no different than anybody else's with rising interest rates. And you look at this and you say, wait a second, it's 3:30 in the morning. How much volatility is probably baked into the market? It's the Swiss. What are they going to do? Nothing, right?
Yeah.
That's how you get cheap binary products. That's how you get cheap entries, guys. This is how it is. You didn't, especially when there was expected to be no change, there's not any volatility baked into it. So that's how you kind of grab these things. And yes, I don't know, 3:30 in the morning is very, very hard for an East Coaster, but if you're a West Coaster, this is midnight. You may already be up. So, um, yeah, those are kind of simple trades. And then the pound did exactly what they're supposed to do. They raised by 0.1, 0.25. They can't really do more. They're kind of on the opposite of the spectrum in the U.S. They could not raise anymore. They're already in a recession. Their numbers are already in the garbage at this point. But inflation is forcing their hand as well, but enforce it on both sides. They had to raise, this is number 5, but they couldn't raise more to battle inflation because now they're getting the recessionary pressure from the backside, and things are getting really rough over there. Our Philly Fed came in negative, and
Not
again, not
good.
surprised. Yeah,
Yeah.
I mean, it was 2.6 last time, and I was after last one. I'm like, yeah, it'll probably go negative next time. It's been really kind of holding firm. Empire State has been the one is this been getting crushed, and it was even worse this time. To assume that it would get bigger, I don't think was right. I think the forecasts were off on this one, so I'm not surprised by this one at all that it's negative. And it's just a little bit. It's not a huge. It wasn't like the minus 11 that they had 2 times ago. But then the unemployment claims came in higher, and now this is kind of where we're going. So one of the headlines that we got was from the Economic Projection Service survey. Now, a lot of people don't know how to kind of take what Powell said yesterday. They're mentioning like, yeah, soft landing and stuff, and a lot of things they're saying now are kind of like the transitory. And would you say shallow? Shallow is the word
Yeah,
he's
it
using
was.
now.
They were looking at a
Shallow recession.
shallow recession in the third quarter. Yeah.
Yeah, shallow recession. Prices are crushing people now, so I don't know if that's shallow on top of the crushing. I'm not sure. But there is good news. Krispy Kreme is giving you a dozen donuts for the price now of the average gallon of gas in the United States. So you can get a dozen donuts from Krispy Kreme for
Oh, great.
$5.09. Just saying. Just saying. When that light is on and they're warm, man, they're so good.
Are you
But
saying that you get the same amount of gas from either one?
I don't know. I feel like I mean, hey, listen, if I eat an entire dozen donuts for the same price, I will get a spare tire. I can roll myself down the street.
There you go. All right,
That's how it works. I'm telling you.
well
Um,
played.
but here's some
Hey.
important figures to look at, and it goes directly into this unemployment claim, and it's probably why the markets are so red today already. Basically, the S&P published Wednesday showed the GDP growth for this year is expected to hit just 1.7%, down from 2.8 forecasted in March. So it's basically been cut in half. Headline inflation for this year, meanwhile, is now expected to be 5.2%, up from 4.3% in March, much higher. While interest rates are expected to be 3.4% at the end of the year, up from 1.9% in March's outlook. So none of these things look great. The other aspect of it is the Fed removed the reference to expectations the labor market will remove strong. Before it said the Fed believed it was taking the appropriate firming in the stance of monetary policy would return inflation to 2% with a strong labor market. Now it doesn't
They're
say that.
they're
They've
willing to take
removed that
the
line.
hits. They're willing to take
Yeah,
the hit on the labor market. I mean, and again, and I know you and I always say this differently, but it's I always use the actual words. But the Fed's
yeah,
mandate is maximum inflation. I'm sorry, maximum inflation, maximum employment with price stability, which is the 2% inflation. So if
yeah,
they're
2%.
price stability, they're making that the priority, and they're willing to forego the other part of their mandate of maximum employment. They're willing to let some of that slip because they have to get the inflation in control.
Yeah,
It's gotten out of control.
yeah. And the way that they kind of softened it, they said, we don't seek to put people out of work, but we also think that you really cannot have a kind of labor market we want without price stability. And they
Yeah.
mentioned going back up to a 4.6% unemployment rate. I'm sorry. Yeah, 4.6% unemployment rate. And they basically said that the idea is we will get back down to the 2%. So their goal is to get to the 2% inflation rate by 2024.
And it takes
Let
time.
that sink in. You sink
Yeah.
in a little bit. We're gonna get where we're at right now is 9%. They're gonna get us back to 2%. Not go negative. We're not gonna go back to those prices. 2024,
It's going to
2
take a
years from
while.
now,
Yep.
a year and a half. So we get to have fun with these prices. Everything really, really high for the next 2 years. So have fun.
Yeah.
Krispy Kreme donuts. Roll yourself down the street.
All right. Let's
Um,
get into the charts. Yeah, because
Yeah, yeah. So
I
there's a lot out there. I mean, the VIX is remaining high today, as it should. It's kind of like people are like, "Wait, you're telling us we're going to lay people off?" Okay. That's always a weird thing. So it is high, and all the markets are absolutely getting blasted. Most of it came in yesterday, late last night. I mean, you can see. Bring this down. There was kind of a whipsaw right around. I mean, you can see that it really kind of shot up from that time frame. People are like, "Well, why the heck would it go up?" It's because they did something, and again, a lot of this was taking the certainty off. I mean, as I said, it seemed like the market was really kind of just, it was really tempting them with one, but once it kind of got digested, then it was like, wait a second, hold on, and again, this is what happens. You get the statement, people are like, yes, this is what we needed. This is good. You're actually finally taking it serious. You're not going to let it run wild. And then when you start reading it and dissecting, it's like, well, wait a second. You said a year and a half for this, and this is going to go there, and this is going to go there. What it is once it was digested, what they said, and large people were like, well, this is what we saw before. This is what it does. This is what we believe. That's when the reality of everything came in. That listen, that was a 0.75 raise. Okay, they are talking about people getting laid off. They are talking about inflation for 2 years. So what happens is this is now the response of what we got yesterday. Um, it is a big move. It's already moved 2 point. Basically everything is 2% from where we moved yesterday. Um, it's a normal reaction. I would say that, is it a day to go long in the markets? No, but if we find a bottom somewhere around here, a lot of this is from the late night and the Europeans reacting to the news. I wouldn't actually be surprised if we do kind of move a little bit, have a little bit of a hiccup. I think a lot of this is really going to depend on really kind of what I guess the talking heads is kind of what I'm saying. If they really harp on the fact that like get ready to lose your job, I mean, how negative they turn it is really what it is. The 0.75, although it seems horrible, it's what's needed. It's what has to be done. And the fact that they're taking that is actually a good thing. The markets don't like it, and the question is whether or not earnings are going to be affected. Again, if people aren't spending right now, they got to do something to control it so money can come back again. So
All
it's
right.
not
What's it
really
going to
the end
mean
of the
for
world.
corporate earnings is what everyone's trying to digest.
Yeah, that's where they're trying to get out of it. Yeah, absolutely, absolutely. And again, the way to play it. I mean, right now there's no additional news today. Japan could step in, and there's nothing else there. And then tomorrow we just have Powell speaking, and again, he's going to talk about this on a kind of global spectrum. So at this point, it's really kind of back to the technical aspect of trading. Looking at this, if it was any other day and you just looked at this, you're going to look and say, hey, wait a second, there's kind of a
Parabolic.
Globex low right
Oh,
there. Yeah, well, it wasn't. It wasn't. I mean, the parabolic move was up. This is the retracement of the parabolic move. I mean, literally, it came off the zone at news time, which is where you're looking to go long, and boom, it shot straight up again, almost instantaneously. And then retraced back down again. But people look at this now and say, "Holy crap, the market's down 2% today." There's your Globex low that was created at 5:15 this morning. If it breaks below that, we're going short. We're going short. So I mean, there are the standardized traps in there. We'd already talked about a break of 35 cent. I mean, right now we're kind of in that Harry Potter trade right there, right? We're looking for kind of a pullback to it, like it broke through, pulled back, and we're kind of sitting there right now at the open. It's looking like it's more of a short right now than anything else. And again, I can run some fibs on it. You can say, well, wait a second, there is your high to low. And, look, we're at the 23.6. Yeah, we are at the 23.6. So people will be looking to take shorts from this level. as well as you can see that there was a zone sitting right there. So everything is lined up right now for me in the as a short, but it is already down 2%. You typically don't want to get short at the bottom, right? After a large move down in price is not when you go to short. So ES is weak. NQ is even weaker. We knew that, and you can see the volatility associated with this. This one literally came up and then boom, slammed all the way down and then came back up again. And it actually didn't even go as high and then did the same exact rollover. So it looks kind of the same way. This trade was out. We can take this one off just so we stop confusing people with, wait, why is it green? Why is it red? I don't understand. But we're looking for a break of that. You can see that it's much farther down. So, yeah, interestingly enough, we had talked about the 11,265. It did. It came down and tagged the 265 one more time and is now stabilized. People are going to be doing the same exact thing, saying, wait a second, we're at the 23.6 right now. We should get into this short, and that's why we're seeing the response right now. The zone's not as clean here, but understand, again, NQ is the weakest of everything right now. Shorting the weakness is not necessarily a bad thing, but you typically want to make sure you get it on a pullback. Its Globex low is going to be down here at 11,268 again. Again, we know there's buyers there. We know that the buyers are actually a little bit lower, so this could be an interesting little trap as well. Overall, I wouldn't say the market is really justified to be positive today. I would say probably more tomorrow, as people are still absorbing this massive number. But right now, there is a little bit of a trap set up here. YM is actually holding as the strongest. We got so close to that 30,000. I said 30,000 would be the big figure, right? Although it's a little bit lower than the trap, there's going to be a million people looking at this 30,000 number and saying, "Hey, if we break that, we're going short today." Yeah, we got, yeah, it's going to be like a lightning rod. It's like, you run around your house with socks on, you get close to the doorknob, and you're like, how close can I get before that shock is there? That's what we're doing. The shock hasn't hit yet, but it's close. And let's see if we run from high to low. Yeah, we're at the same thing. And actually, I'll remove this real quick. If you look at this level, this pullback, it was an impulse, correction, and then impulse again. You could draw a zone off of that level, and guess what? We just tanked on right there. We'll put it there. Come down to the 1 to 3. Again, the 1 to 3 is literally right there. It's right past that 30 number. Run fibs from the high peak down to the low, and you can see the 23.6 bisected it right where the top of this green candle is. And it just happened to be the 100% draw is right at that 30. So that 30 is like a lightning rod. If it touches it, there's going to be that spark there. We may run down to that level and kind of be opening at 30,000. But I'll tell you right now, if everything is set, with everything being said in the last 24 hours, if we hit 30,000, every newscaster out there is going to be like, and the Dow just broke 30,000. The world is ending.
Right. They just want to say it.
Yeah, I mean, the 30,000 was a ceiling forever, and then we broke it. It was like, it'll never break. And it's like, holy crap, it did. What's next? 40? So that's going to be a big one today. And then the Russell looks very, very similar. We talked about a Harry Potter coming through, and here's the draw. We mentioned that the zone that it would potentially bounce off of, and it did, right? Here's the zone we talked about the bounce, and I'll remove these just so you guys can see it. Here's the bounce that we talked about. There's the bounce that we just got. Taking a more near-term kind of zone right there is what you'd be looking at. And it looks very, very similar, right? Right there. And your 1 to 3 is sitting right there. Grab some fibs to confirm it, throw it down, and magic, look at that. The 23.6 is going right through the bottom of the green candle in the base. So they're all kind of lined up the same way. You could kind of pick your poison, figure out which one you like the best. Russell has a little bit more to go, and it's kind of the middle of the pack of where you go short. And again, we talked about this coming down to 1665 today. I will say on a truly fundamental basis, the 0.75 will affect the Russell more than anything else out there. But that Philly manufacturing is actually not helping the YM at all. YM is technically the strongest, but that number, people are going to look at that and be like, wait a second, what the heck's going on there? Right? So watch out for that one. It looks like we just had a comment from OPEC, is working to remain a dependable supplier for the market. OPEC, yeah, we remain a dependable supplier. We need to
we do have to take a look at the couple of those FX pairs while we still got time. Certainly the Swiss franc, and the yen and the pound.
Yeah, I mean, the Swiss franc, we talked about it. We drew it yesterday. I think this was with my guys, not this group. But I mentioned that, listen, parity was going to be a big deal. We had a zone sitting there on a higher time frame, literally right above parity. And yesterday's news, by the way, it wasn't really the Swiss. At 2 o'clock yesterday is what started this move. It was the U.S. change in there and kind of seeing where it was going to go. And it literally came down based, and then the Swiss news came out and straight down. So kind of the same thinking. I mean, you could have done the same exact thing, saying, oh, wait a second. And again, here, I'll draw it this way so you guys can see it correctly. There was your high to low. It pulled back. We knew we had sellers. You can see right here. There's 2 lower consecutive lows, which just happened to be at the 50% retracement level. You knew that there was news sitting right here that, again, we didn't think they were going to raise, but we said, hey, listen, if they say we're going to raise next time, it's the same thing. And there was your response off of it. Okay. Now, I mentioned and did that kind of like education piece about 330 and how important that was. I will say this, and again, remember, I'm 100% transparent about these kinds of things. I'm not a paid speaker for Nadex here. At this time, these were not good trades. I can tell you right now, I looked at them all with my guys, and unfortunately, the knockouts were great. The call spreads, not so great at all. But the binaries actually had the best play. It's important to understand all three because they are all priced differently based off kind of different things. You got to make sure you find the right one. There's always a sweet spot somewhere. But at 3:30 in the morning, all of them look great. Okay, they tend to. I wasn't awake this morning, but they all tend to look great. So unfortunately, this one is done. I would say, is there probably a bit of retracement in here? Yeah, we'll probably find a bottom in here. There's where it's at right now happens to be the 61.8. I can tell it's a purple line. Yeah, the 61.8. You can see this is an area where buyers are coming in. I wouldn't actually be surprised if you do see a bit of a reversal off of this one today. If there is a reversal play, I would say it's probably this one. The dollar yen, I'm sorry, the euro yen. Again, we drew this one yesterday for you guys. It literally came and fell right in there at the news level at news time, and then literally shot higher. It didn't make it back to the 105, which is fine. But I think this one today, as you can see right now, we're seeing dollar weakness come in. I think when the U.S. trader comes on, this one will start to reverse as well and come back down. So those are two reversal plays. The other one was the Aussie. Again, they had horrible news yesterday. Actually, it's the Aussie dollar. They had horrible news, and again, we were talking about news time. We were hoping that it came down. It didn't. It just pulled back, but it did rally up higher, and then the news last night started to bring it back down again, even though they had great news. This one also is a candidate because, again, looking at gold and silver. Gold and silver, interesting levels. This one came down. We missed it by just a little bit. But here was the news yesterday. We said if we can get down to 813, we did. We came right down, and then it took off. And you may look at this and say, well, wait a second. We raised 0.75. Why the heck did this go higher? One, there were sellers there confirming it, right? A lot of times the news doesn't matter. But number two, the statement about we're hoping to get it back down to 2% by 2024. I don't think that's what a lot of people assumed in the market. I think a lot of people thought by the end of this year it would be done. Talking about going a whole nother year with rising inflation that continues to the not neutral. I think it shocked a lot of people. But I do think gold and silver today, because we've kind of absorbed the shock, and now it's like, listen, we got the 0.75 there. I do think that this thing continues to drop lower. And then again, gold. I'm sorry. Oil, actually, we're low right now, 114.
Yeah,
And again,
low.
this has to do with and again, this is not coming up with additional supply. OPEC says we want to be reliable. What this is this is the reality that people are going to lose their jobs, and that unemployment is going to go from 3.6 to 4.6 in the next year to 2 years. So this is that demand destruction that we're talking about over here. Again, it's not increasing strategic oil reserves, and it's not us releasing more of that. And we didn't find new oil, and Russia is now not just going to give all the oil away for free. It's not that. This is the reality that we are about to go into a recession. The 0.75 pretty much solidified it, and the fact that they expect our unemployment rate to go up for the next 2 years. That's called destruction and demand. Natural gas, unfortunately, higher, and again, this one is still doing that parabolic move very, very slowly. And besides that, the only other thing out there, I know we are a little bit late today. You're seeing the cryptos get further destruction. Bitcoin is now flirting with that 21,000. It broke. It didn't break 20, but it got really close. It got within $60. And got a little bit of a help from the dollar yesterday, but after the initial response to the dollar, again, down 6%, Ethereum down 9% again, Dogecoin down 9%. So the crypto market is just getting slaughtered.
Volatility there, and stay tuned on that one.
Yeah, and Elon Musk yesterday made a comment or whatever. There was it was the Grim Reaper walking down 3 doors with a blood trail out, and it was stock market, cryptocurrency, and the third door that he was walking up to was real estate. So, again, It looks like some of the big names are getting out there. So just be cautious in the markets. Again, the way to play these massive volatility-based days is really to go in there and see what the new trend is. This is where swing traders and long-term traders get absolutely just slaughtered. Intraday, it could be a great intraday trade. There could be a lot of great positive trades today, even though the market is red on the day, and vice versa. After the huge response today, I say huge, but everything is down 2% already. If we just kind of maintain and hold and go sideways from now for the rest of the day, it's kind of setting us up for a feel-good Friday, right? After large days, we tend to have a day where we kind of reset ourselves and kind of come back again. With lack of any news tomorrow, pal speaking, but this is on an international basis, nothing. There's no bad news there. You ever heard that no news is good news type thing?
And we're going into a holiday weekend as well.
Yeah.
So,
yeah.
Yeah, that's so. Yeah, Monday is a national holiday, so
Yeah.
that's more reason that we might potentially see something
Yep.
good
Yep.
for tomorrow.
Yep. So yeah, so I would say today is more gloom and doom. Tomorrow could be a day where there's better, there's some better hope to it. So again,
Yep.
look for pullbacks. Remember, the market moves in two directions. It's impulse and correction. It's not up and down. Look for the correction moves. Look to see if it's pulling back to a level. And again, whether it be supply demand, 23s, any type of a fib level out there, those would be great little entries. Use limited risk on all of them because again, it can always go against you. And focus on risk first, not profit. And you guys should do okay today. So
All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, please feel free to reach out to Brian directly at support@keeptradingsimple.com. I am also available, todd.rich@nadex.com. Uh, just the quick recap. Yes, the Fed raised 75 basis points. Yes, the Swiss raised 50 basis points. Yes, England raised 25 basis points. Lots of volatility across the markets. People are trying to digest how this is ultimately going to play out and how it's going to manifest itself with corporate earnings. We're seeing volatility in the FX markets, and we're seeing some movement in the commodities as well. So pick your spots and pick your product. Remember, knockouts, call spreads, and binary options, all great ways to potentially play this price action in a defined risk reward environment. If you're not familiar with some of the other products, learn about them. We certainly do sessions to teach everyone how to use all of the different products. Thank you so much for joining. Brian and I will be back tomorrow morning. And again, remember, Monday, Nadex will be open with certain products like FX markets for part of a day on Monday, but it is a federal holiday. But we will be back tomorrow morning. Hopefully, we will catch you then. And until then, good luck in the markets, everyone. Thank you so much for joining.